Okay, it's 0 to 2 minutes past 8. So shall we start? Okay, please listen carefully. This money market is really important for your final exam. Not only for the money market, but this money market, the questions will also appear in your forex. I guess related to the forex, equity, bonds. Yeah. So it's not solely purposely meaning for money markets, but the other markets also. So they are interrelated. So the money markets. So please give your attention to this. Topic 3, the money market. Okay, since we are actually having discussion on the financial market regulations, the disclaimer is important because okay, this is educational discussions, not to represent the official positions or the policies of the financial institutions in Malaysia. Yeah, all the materials, opinions, point of view expressed during this class is only for the purpose of educational. Okay, for the education, it's not representing again official positions or policies of the financial institutions in Malaysia. Now, talking about the money market, money and its markets. When you talk about the money, everyone needs money, right? This is a fundamental in the functioning of an economy. It facilitates the exchange of goods and services. Let me read this one, then later I explain. Reduces the amount of time and effort to carry out a transaction. Now, you are talking about the market. Money market is a component of financial markets for transition in wholesale short-term funds. The money market is a key appendage of the banking system. If the capital market acts as the wheel of the country's financial system, then the money market is the gear that derives both wheels. The tenor of the money market instruments is ranging from overnight to 12 months, but the most common is 3 months or less. Hence, the money market is often characterized as the market for short-end loans and short-term investment. Okay, to summarize this one, everyone needs money. So it's really important. And where to get the money? There are sources of where the money comes from. And then when you are talking about the money, it has its own market. So this is it. And when you talk about the money market, it's for short term. In finance, you have already learned about the money market is for short term, ranging from overnight to 1 year. Theoretically, in practical, is not necessarily. Yeah. As for bankers, if you ask me, if you ask my husband, why there are some money markets like T-bills and then the Malaysian Treasury bills or Malaysian Islamic Treasury bills, why they are being categorized under the bond market? And why these T-bills, they are being categorized under bond market where they have a longer tenor. It's not that less than 1 year, but more than that. So if you're asking me, there is no specific period for you to identify or rectify, oh, that securities or that instruments are meant for a money market. No, it's not necessary. And it depends on the regulators lah, suka hati dia lah. Nak put where to put the money market instruments, whether they want to put in the money market itself or they want to put like T-bills in the bonds market. So depends. So these are all up to the regulators where they want to put their instruments. But basically, theoretically, yes, the money market is for short term, less than 1 year. This is how, again, this is what actually you have already been kept in mind for a longer term. But it's up to the regulators where they want to put their instruments, okay, whether it's to be in the money market or in the capital market. But whatever happened in the money market, it will have a chain effect to the capital market. As you see here in the second paragraph, the money market is the gear. I would say the money market is the fuel, or the money market is the engine to make the car move. The wheels of the car, that will be the capital market. So whatever happened in the money market definitely has the chain effect to the capital market. So whatever happens in the money market, so that will definitely tremendously affect the capital market itself. So here it is. Now let me again borrow your money. Anyone got money? Yesterday I got $100 for my student. Not free lah, then I need to return. Hey. Got money? Anyone got money? Money, 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 money. I know lah, you cannot give ampau, not yet married. Borrow your money only. Money, money, money. Oh, you got ampau semua. Thank God. Yeah. Yeah. You think you ampau? You got it. 100. Sorry, borrow only. Borrow only. 10 years lah. Okay, now you're talking about the money, Okay, think about this one. The money, okay, this is related to forex, related to the forex. Okay, when you're talking about the money, this is money, right? Money. Hey, this is just a paper. This is just a paper, ma. It's just a paper, right? It's just a paper. Is this a paper, right? Who identified this is money? You, right? What's the value of this? 100. Who put the value? You, right? You, right? If let's say this one, if let's say I'm saying this is just a paper, can I shred it? Can I shred it? Because if I'm an American or if I'm an African or if I'm from somewhere, not Malaysian, and I pick up, hey, what paper is this? Seriously, you put a value, right? This is not money, and this is money. This is actually money. This one is not money. It's just a medium of change to simplify your transactions, right? So you can buy and sell using this commodity. Using this medium of exchange, you can exchange, not like the barter system last time. Have you ever heard in the Islamic finance, this transactions of the forex and buy and sell of the currencies, it is haram. Have you heard that? This is just a commodity of exchange. This is just a medium of exchange, sorry. It's not a commodity for you to transact. Yeah? So you put a value here. When you put a value, it opens to speculation. So those who are taking Islamic finance, you need to learn this concept. So for Islamic finance, if anything you want to get from the money is not simply, oh, I give you a loan and then I charge you interest. It's injustice. Yeah? It's injustice. It's unfair. It's not justified. If you want to make money from this medium of exchange, it has to be attached with the underlying asset. You buy, okay, this one is attached, okay, and then you are selling, okay, someone is buying, then you can make money from that. It's not simply charging interest. It should be having an underlying asset. This is what is called haram, when you are just transacting or selling this money and charge interest for nothing. Yeah, the value of the money, it all depends on the demand and supply. The higher people demand for it, the higher will be the value. The lower demand for that particular money, the lower is the value. So when there is a demand and supply, it tends to appreciate and depreciate, correct? So if I got more money, I buy your currency. Oh, you are so happy. Oh, Malaysian currency appreciated so much. I'm the millionaire or billionaire like the George Soros. Have you ever heard about the George Soros? I appreciate if you can read about the George Soros against the currencies. Last time, the crisis of the George Soros, the culprit, like Tun Mahathir said, he is actually not a culprit. He is just a trader, and he got a lot of money, and he bought all the Asian currencies, and suddenly he dumped it in the market. You cannot blame him. He's just a trader. In ethical, in finance, or in the business, he is legal in doing that. Morally, ethically, is not lah. Again, that is it. Okay. Thank you. Okay, this is about the money, and I've already introduced you actually to the forex market. Okay, and then I talk a little bit on the Islamic finance, and I talk about the money market. Now, the functions of money, three only. Liquidity management, avenue for trading, lubricate, central bank monetary policy. So Take a look at this, liquidity management. Liquidity is important because it shows how flexible a company, okay, bank is also a company. Because bank, if you need to have a bank, okay, the name of the bank also needs to register with SSF. When you once you register with the SSF, it's considered as a company already, right? So a company is in meeting its financial obligations and unexpected costs. As for financial institutions like banks, money market helps them to cope with short-term pressures due to different maturities of their securities. As for non-depository institutions, non-banks, okay, non-financial institutions, they can manage the fluctuations in their working capital needs by obtaining low short-term funding, and they are also able to enjoy investment returns with low risk. Okay, that is liquidity management. So let me explain this one. Each of the company in the market, we need to manage our liquidity. Yeah, that is the liquidity management. Your cash flow lah. Yeah, if example, you own a business, of course you want to know how much you have in hand at the end of the day. So you need to have a surplus, for example. So this one, the surplus is managing your cash flow. Yeah, so that will be able for you to pay your creditors, okay, or that will be able to pay to your suppliers. Or again, the money you can do to buy something. So this is very important. The more liquid is your position, that will be good. Illiquid positions, that is not good. So as for banks, like I mentioned here, financial institutions, every day they are having a pressure of withdrawal. Yeah, because if I'm the customer of the bank, I will go to the bank. I want to buy money market instruments. I want to invest lah. Like I put the money and buy fixed deposit, for example. Okay, for 3 months. Okay, fine. You also come to the bank. Okay, you also buy fixed deposit. Okay, for 6 months. Okay, you also go to the same bank. Okay, and then buy the fixed deposit. Just fixed deposit lah. For example, and then the tenor also 3 months. And tomorrow, okay, you go to the bank and buy fixed deposit. Okay, 3 months. And then you also buy, okay, same. See how many of you? So we have different maturity because we go to the bank in different days and with different maturity dates. So every day, the bank will have that maturity. So they have to make sure that their position is always in the surplus, not always in the high surplus. That would be great if they have the surplus. If shortages, that is not good for the bank because they are having that pressure. When they have the maturity in the bank, of course, people tend to withdraw their money during maturity, right? Correct? So the bank is having that pressure. So in the shortage, the banks need to borrow. How the banks will borrow? They will go and issue money market instruments in order for them to borrow from the market. Or the banks can go to the Bank Negara and borrow from the Bank Negara at the end of the day. And of course, each of these borrowings will be charged with interest rate. But how much the Bank Negara and other banks are charging the banks with shortages, that will depending on the rates that we are going to discuss later on. Am I talking so fast? Okay. If you don't understand, I can repeat. Okay. If you don't understand, I can repeat. Okay. But okay, like later we discuss about that. Okay, later. So for the time being, let's absorb that one first. Okay. So that is for the liquidity management. But for the corporations, money market is for a short-term funding, short-term investment. Because money market, short-term funding, short-term investment. Okay. For the company, non-banking institutions like insurance or any other companies, imagine I'm the company. Imagine I'm a company. Tak cukup duit. I have shortages to carry out my businesses or for some projects. So I don't have that particular capital, enough capital. But I only need for a short time period. I cannot issue bonds because bonds is for longer term. And bonds, if you want to issue bonds, you need to engage with many people. It will consume you time, bonds. Because you want to issue long-term securities. Okay, it's non-favorable for me. Okay, let's see. Where to go and find this particular money? Bonds cannot. If I want to issue shares, also can. But you see, if you want to issue shares, how long does it take for you to issue shares? 1 year, 6 months, 1 year. It can be up to 2 years. I cannot wait that long. And then where to go and get the money, funding? Can I borrow from the bank? Can. But you know, the bank is so cruel one. The bank will charge me high interest, you know. If you go to the bank will charge me high interest. Bond cannot, share cannot, not to say cannot lah. Borrow from the bank also. All this will be charging me high interest rates, high cost. So what I will do as a company, I will issue CPs. CPs, you know, commercial papers, correct? Commercial papers. Commercial papers for short term. That is money market. I issue CPs. So people will buy my CPs. CPs, commercial papers. So when people buy, I get that money. When I issue CP, this CP is only for low borrowing cost. That means I will only pay low interest rates to my creditors. CP ni interest tak mahal. Interest rendah saja. The interest is low. So my borrowing cost is low. So I can be relieved. Low interest rate. So lower my cost. If I borrow from the bank charge me high interest rate. If I issue bonds, the bond will take time. I issue equities, my company will be a public listed, and then it takes time also. So it's not favorable for me. So the only thing that I can issue, one thing is that I can issue CP for short term, and it has a lower interest rate. That means the borrowing cost is low. So I can a little bit relieve because my cost will be a little bit reduced from other alternatives of getting funding or getting financing. But in Malaysia, the requirement, not all companies can issue CPs because our money market is small. When your money market is small, to protect the interest of the creditors or the interest of the investors, the regulators have already imposed only single A companies, if I'm not mistaken, single A companies can issue CPs, not less than that. Single A company can issue CPs. Single A and above lah. No Bs or no B plus, no BBBs, no BBB plus, no. So that is why we have this money market for short-term borrowing and for short-term investment. Let's say I'm the company, if I have extra money, I can go and invest in any market instrument that are offered by financial institutions, that are offered by the Bank Negara, that they are offered by any other institutions. So I can put my money. If I got extra money as individual, I can also deposit my money by subscribing to the fixed deposit. Okay. So this is all about the liquidity management. So it's all about getting financing or getting funding or for your short-term investment. They are all for short-term financing, short-term funding. If you have extra money, if you want to gain interest for short-term, and then you go and subscribe any money market instrument offered by financial institutions, for example. And also by the companies. You can also buy CPs from other companies because the companies need money, you have the money, you buy. That is the thing. For liquidity management. This is all about liquidity. Avenue for trading. The money market provides financing to who are in urgent need of short-term funds. This is just for a light liquidity management. As for we as investors, this market generates fixed income with short-term maturity, which makes investors can swiftly access their funds whenever they need. Short-term investment. So I can give an example to you. Let's take a look at this. Even though I don't like Maybank, okay, financing and deposit. This is the example. Bankers acceptance short-term revolving credit. Yeah, if banks need money also, they can issue this bankers acceptance, whereby people can subscribe and they will pay low interest to their subscribers investors. Short-term revolving credit. So this one ranging from 1 to 12 months. This is more on the financing. So to finance the banks for certain purposes. Deposits. You have deposits. When you are in need of when you have the surplus funds and then you want to put your money for a short-term investment, you can have this repurchase agreement. Negotiable instruments of deposits, fixed deposit, any other instruments that are being there, for you to select. So this is about the money market, Maybank. But these are coming from banks, the Bank Negara Malaysia also, they have their money market instruments. Government of Malaysia also, they have their money market instruments. Government of Malaysia, their money market instruments are T-bills, Malaysian Treasury bills and Malaysian Islamic Treasury bills. So that money market instruments from the government. Bank Negara, they have quite a lot also money market instruments. I don't want to mention each of them because you are not learning about the instruments. And then financial institutions, of course, they have quite a lot of money market instruments ranging from financing to deposit instruments. And then companies can also having their money market instruments. So for example, the commercial papers. For the money market instruments, Bank Negara Malaysia and Government of Malaysia, their money market instruments has zero credit risk. Because they are from the secured entity. Bank Negara, their instruments are protected by the central bank. Government of Malaysia, when they issue securities, their securities are protected by the government so that they have almost zero credit risk. And that is still a tendency of having a default risk, but the chance is very slim unless your government collapse or your Bank Negara collapse lah. Zero credit risk. Not all money market instruments got zero credit risk. Only the money market coming from the government and central bank got zero credit risk. Almost no default risk. So you can have your money back guaranteed. When you are talking about the money market is not all money market instruments are covered under PIDM. Fixed deposit, it is covered under PIDM. Some of the money markets, they are not covered under PIDM. Some of the money market instruments, they are not covered under PIDM. So you need to know which money market instruments that are covered under PIDM and which money market instruments which are not covered under PIDM. If that is for investment, that is not covered. The name also investment products, money market investment products. When you are talking about money market investment products, it's not covered under PIDM. So you can see here lah, the IDM. How we protect you? See coverage of this. These are all the instruments or the products that are covered under PIDM. DIS, these are not. These are not. Some of them, they are new money markets. NIDs, interbank money market placements. So these are not covered under PIDM. So for your information, IDM, they have new announcement, the member list, they have is digital banks. Members bank, digital banks here. Malaysia, we have digital banks, Aeon, JX, and Boost Bank Berhad. They are new banks, beside the licensed banks, licensed members bank. And these are not non-member institutions. Back to the money market here. Lubricates central bank's monetary policy. The central bank is responsible for guiding monetary policy of the country and taking measures to ensure a healthy financial system. Through the money market, the central bank can perform its policy making function efficiently. Later, I will elaborate this one in further details. So for the time being, the function of the money market is for a liquidity management, avenue for trading, and lubricating central bank monetary policy. Anyone who cannot understand? If you are talking, Because you don't understand, please raise your hand and please inform me. If you're talking because of something else like the pasar, because you have something else, I appreciate if you can go and talk outside. Okay, it's really disturbing. I can hear your business sound over there, especially. BFT, I've already reported you to the HOD because of your manner. Last 2 semesters already. Okay, who regulates Bank Negara Malaysia regulates money market in Malaysia. Bank Negara Malaysia regulates money market in its operations in the country. It's always Bank Negara, yeah? Bank Negara oversees money and foreign exchange markets to promote their integrity and orderly functioning of both markets. And at the same time, Bank Negara supervises financial institutions to promote monetary and financial stability. So let's recap for whatever we have learned. Last 2 weeks, Bank Negara mandate, they have two. One is to maintain financial stability. The second is to maintain monetary stability. FMC will be responsible for the financial stability. Meanwhile, MPC is responsible for the monetary stability. These are the two mandates of the Bank Negara. Each of these mandates is handled by different committee, MPC, FMC, and they have the objectives. Even though these two committees are running separately, are operating separately, or are doing their job separately, but they have to cooperate together in order for them to make their policy, especially my MPC. Because MPC, when they want to set the direction of their monetary policy, they have to listen to the FMC. How about their strategy for financial stability? So hereby, you know, nowadays, we are having quite a high inflation, correct? Everything is so expensive. So MPC, when they want to set their monetary policy, they have to ask what's the condition of the market nowadays. They cannot simply increase the interest rates or lower down the interest rate. They have to ask the FMC, what's the condition of the economy? How's the market? How's the financial stability of the Malaysian economy? Yeah, how the people are doing, how the economy is doing, how the business is doing. So everything needs to be related to the FMC's report. MPC cannot simply decide on their own. So this is about the setting the policies for both markets, for both markets, money market and foreign exchange markets, in order to promote monetary and financial stability. Okay, now all issuance process of the money market instruments had to go through the Bank Negara Malaysia. Because money market is under Bank Negara solely, everything must go through Bank Negara for approval. But for the Islamic, they have to go to the Sharia Advisory Council of the Bank Negara Malaysia. Islamic is under SAC BNM, while conventional is under Bank Negara itself. And money market, Bank Negara Malaysia conducts daily monetary operations to achieve and manage the desired liquidity in the banking system. So the Bank Negara is actually conducts daily monetary operations. Of course, every day they have the monetary operations to manage the desired liquidity in the banking system, because you need to make sure there will be sufficient and efficient mobilization of funds from one party to another party, come back to the initial party. Membership and professional designation for the money market dealer and broker. Please raise up your hand if you feel that I'm quite fast. My face is quite fast. It's much it will be hard for you to understand. Please raise up your hand. Membership and professional designation for the money market. Take a look at this one. This one I find out. Okay, again, I've already introduced you to this AICB, whereby this institution offers quite a number of certified qualifications. For the money market here. Then you have this program for you to attend if you want to become a money market dealer. So this is the module 1 up until 4. Second module is the money market. So you need not to only pass the module 2, but you need to pass all that 4 Don't worry about the fees because the fees is absorbed by the own financial institutions. If you work with that financial institution, it will pay for you sponsor lah. No need for you to fork out your money. But in order for you to become this money market dealer in the financial institutions, you have to pass this exam. The module 1, that is the textbook that I showed to you in the lecture class, the biru buku. The biru buku, buku biru. Biru buku. Buku biru, that one. That is actually what you learn. If you have already learned FMR, module 1 kau timur dah. So the rest of the formula, module 2 also kau timur dah. Okay, can pass lah. First sitting pass. Okay. So you is not only money market dealer, if you want to become a forex dealer, certified forex dealer or bond dealers in the financial institutions, you need to pass this one. And then of course in the dealers, you become a dealer, that will be the heart of the bank. Your salary will be much more higher than the others, and their remuneration will also be more than the others. They are earning quite a lot. So this is it. I'm not a dealer. I don't have the certifications. My husband here. My husband here. So these are the ones. If you are not actually possessing these certifications, because this is a requirement by the regulatory bodies, there are consequences of not having these professional certifications. You cannot become a dealer for a long term. You cannot become a dealer in the financial institutions. It will be hard for you to seek job for any other institutions. You will not get your remuneration and everything, and it also can jeopardize your KPI, your performance. So there are consequences of not possessing these qualifications, and this already being a requirement for all the financial institutions for having their dealers with these certified certifications by professional body. Always remember, if you are dealing with a forex dealer, my husband is a forex dealer, you need to make sure that the one that you are dealing also possessing this certified or professional certification. If not, they are just an illegal forex dealer. That's why you have that scamming lah. Money market participants, even though you have the banking institutions and non-banking institutions, but these are the only 4 major money market participants in the market, namely banks, non-financial institutions such as insurance companies, business corporations, the governments, and the central bank. Central bank is also part of the major participant in the money market. Again, your PMX bising already. Your PMX this time baru nak pergi kerja. PMX, this time baru nak pergi kerja, Banks uses money market, or banks use money market for liquidity management, especially to adjust the mismatch of assets, liabilities in their statement of financial position. Bank can also invest their surplus funds for short-term period by buying money market instruments. Subsequently, they can sell their money market instruments to raise funds. So banks can be easily selling their instruments and can easily subscribing to other instruments. If I'm the bank, if I need funding, I can issue money market instruments. And I'm the bank, I can create a lot of money market instruments for people to put their money in my institution. As simple as that. Senang saja. If you want money, issue things. If you want to offer for depositors, then you issue deposit instruments. If you want money, then you offer debt securities, debt papers. Not debt, debt. Not debt, debt papers. Simple aja. Corporations ke, governments ke, institutions ke, or bank negara, if they want money for short term, they issue debt securities. They issue papers lah. I'm the bank negara, I'm the government, I'm the corporations, I'm the bank. And if I need money, I issue debt securities. When you issue securities, of course, got paper lah. This is representing you are in debt. You have debt obligation. But for banks, I can create thousands of instruments in order for me to invite people to deposit their money in my institutions. Okay, you can see, if I need money, I issue this paper. You subscribe lah. Whatever you want to name this paper, T-bills ke apa ke, NIDs ke apa ke, it's just simply for funding, for financing. You create lah whatever and you put the name lah whatever. Government you put the name and T-bills. Okay, Bank Negara, okay, Bank Negara notes lah, itulah inilah. Okay, financial institutions, okay, they put the name lah, blah 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 blah. Okay, the company put the name lah, CPs lah apa semua. But for the purpose of financing, getting funding, and of course there will be interest lah. Okay, but for banks, financial institutions, they are not only issuing these debt securities for them to get money, but it also needs investors or surplus spending units to put their money in their institutions. So I create lah, savings account lah, current account lah, fixed deposit lah, fixed deposit money market lah, in order for me as a bank to invite you to deposit your money or to save your money in my institution, so I can utilize that money. Okay, it's different, okay, funding, okay, and deposit instruments, okay, that will be different. Okay, short-term funding, short-term investment. For business corporations and the government, they are also using money market for short-term investment, for short-term funding, okay, via the issuance of their own securities. The use of open money market operations and the participations of the money market players will influence the liquidity level and short-term interest rates in the domestic financial system. So, an interesting feature of the Islamic money market and its instrument is that they are accessible by conventional and Islamic financial institutions. So for the conventional, their market players are only for conventional. Meanwhile, Islamic money market, their market players are global market players. All can participate in the Islamic money market. Conventional can go to Islamic. Islamic cannot go to conventional because their funds cannot intermingle with the interest. So Islamic cannot put their funds in the conventional. Conventional can put their funds in the Islamic. So conventional is meant for conventional, Islamic is meant for all. Okay, as simple as that. Okay, these are the money market instruments, okay, for the monetary market operations. I don't want to go one by one. This is just for your knowledge. We have ranging of instruments coming from the conventional and Islamic. So you have the government of Malaysia, that is the upper or the utmost player in the money market. Bank Negara Malaysia, they have quite a lot. Financial institutions or banks, they are also having quite a lot with different names, and their corporations. The corporations CPs lah, of course. The corporations cannot create deposit instruments. Corporation is not banking institutions. Banks can only, the only banks can create deposit money market instruments. I mean savings lah. You get what I mean? Government savings institutions or not? Depository institutions or not? Government depository institutions or not? Banks depository institutions or not? No. Government? Government is a depository institutions or not? No. Bank Negara is depository institutions or not? No. Corporations, business corporations, they are depository institutions or not? No. These three institutions, can they create deposit money market instruments or not? Cannot. They can these institutions, these three institutions, can they create deposit instruments or not? Like savings account, current accounts, fixed deposit, can they create or not? Again, cannot. Only banks. So meaning that three institutions are namely governments, Bank Negara, and corporations, they can only create or issue financing instruments. for them to get money. Okay? They cannot create deposit products such as savings, current account, the fixed deposits, because they are not depository instruments. So that means they cannot take deposits from people. Only banks, they can create financing and create deposits products, including deposits money market products. Deposit money market products, fixed deposits lah. Okay. Banks aja yang boleh create financing products, means loan, and deposits product, that means savings. Other institutions, they cannot create deposits products, means savings. They can only create loans or financing products. And so you have to be able to differentiate between these two products. In a financial institutions, kita ada dua produk saja. Satu deposit, satu financing. Deposit tu savings products, okay? Financing tu loans products lah. Okay. Savings can be ranging from savings account, fixed deposits, current accounts, and blah 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 blah. Financing products you can having a lot. Okay, monetary policy operations. Okay, Bank Negara monetary policy operations. Monetary policy operations are wholesale and interbank market transactions undertaken by Bank Negara to manage liquidity in the financial system by absorbing or adding liquidity via various types of instruments to achieve its operating target, which is the average overnight interbank rate. So the primary objective is to ensure this AOIR, average overnight interbank rate, remains within the corridor of the overnight policy rate OPR as set out by the Monetary Policy Committee, while ensuring the efficient functioning of the conventional and Islamic interbank money market. Okay, these are the five components of the money market operations: daily operations, conventional and Islamic instruments, standing facilities, statutory reserve requirement, and Islamic money market operations. And I'm not going to discuss one by one. Again, this is not for you to know, this is just for your market knowledge, just for your information. Every day, the bank will have this money market or monetary policy daily operations. And the operation starts at 9:15 a.m. for the first session up until 10:15. That's all. Okay, this is for the Bank Negara. Evening session 4 to 4:30. Bank Negara, daily operations of the Bank Negara. It's not daily operations of the financial institutions. Financial institutions starts at 9 up until 5 o'clock. But this is Bank Negara Malaysia's daily monetary operations. They have 2 sessions only in a short period of time. Okay, and everything would be go through this tendering and issuing a system fast. Not fast and furious, fast. This one. For your information, okay, this is market information. Let's say I'm the government of Malaysia. If I want to issue T-bills, I cannot simply issue. Because Bank Negara is the regulator of the Ministry of Finance. Bank Negara acts as a banker to the government of Malaysia. So if I'm the Ministry of Finance, if I'm the government, I tak ada duit and I want to issue MT bills, treasury bills, I have to go to the Bank Negara and ask the Bank Negara to auction my securities in this fast system. Government, we don't have the financial system like this one. It is prohibited. Again, government tak boleh apa-apa. Government is just, okay, it's just a government handling the economics, okay, and everything, fiscal policy. Government cannot set up this system like this. They cannot set up SWIFT system. They cannot set up, okay, a rental system like the banks. Again, cannot at all. Okay, any system related to the financial, okay, operations, the government of Malaysia cannot do. Okay, all the system will be under Bank Negara. Okay, so if I want to issue T-bills, I ask the Bank Negara as my banker, as my advisor. I want to issue T-bills. Could you please auction my securities here so people can bid? Okay, so everything will be managed by the Bank Negara this one. Okay, so you have the ID and everything, password. I tak ada ID dah. Okay, the result of the bidding and auction, yeah, the tender result will be, okay, published here. Okay, and then they have the facts and figures, and then have the links and everything lah. This is just for your market information. So everything will go to the Bank Negara Malaysia. Okay, and the FAST system also can be accessed by the other financial institutions. So when the financial institutions start their operations in the money market, example, they will go to this FAST system to look at whatever necessary references or figures for them to know. For example, like this one, liquidity position for conventional and Islamic. They will go here and forecast. This is in the hands of the money market dealers. So they know the position, okay, entirely. So for the Bank Negara, they have this particular system. And for the other banks who are dealing with the Bank Negara, for the morning session, this will be it. And at the end session, that will be from 4 o'clock to 4:30. This is when the Bank Negara deal with their institutions. 2 sessions. If you want to go and find your mother, yeah, which is the Bank Negara, this is the morning session that you can go and find, okay. And after that, there will be another session for you to report to the Bank Negara, okay, and then have their session, okay, at 4 o'clock for the late, okay, for the late evening. Okay, so that's it. Okay, no need for this one lah. Okay, this is just for the market information. I just put there as a diagram. This one I take from the Bank Negara Malaysia website. And for the money market instruments, okay, this is it. Okay, this is also for your market information. And these are the following instruments of the money market operations. Okay, for the following uncollateralized borrowings, repo, okay, auction of the Bank Negara notes, forex. Okay. Meanwhile, Bank Negara influences the Islamic interbank money market liquidity through an array of Sharia compliant instruments based on the Islamic contracts through various trading platforms, including Bursa Azilah, which is the commodity trading platform. Okay, don't worry about this one. Just skip this one. Okay, maybe these standing facilities, you want to know a bit, okay, of these standing facilities. Now, in the bank, for example, this is just for your market information. Let's say one day you are becoming one of the dealers in the financial institutions, just like my husband. Okay, you know, from the front line, the market or the bank closes their operations at 4 o'clock at most. Yeah, you only know, yeah, 4 o'clock, the bank's tutup already. Okay, you cannot go and deposit your money, or you cannot go to the bank and do your things. You cannot go to the bank because the bank has already closed. Yeah, actually, back behind the story of the banking operations, especially in the treasury market, being a dealer, 3:30 will be their closing position. 3:30, so 3:30 they will be squaring off their position, squaring to match. Okay, ada maturity ke tak ada, they will match with their funds. At the end of the day, at 4 o'clock, after they have already matched their assets and liabilities, it so happened they have shortages. Shortages. You have to cover your shortages because there is a possibility of the customer will withdraw their money. Yeah. So you don't want that to happen, shortages. So what you will do at 4 o'clock, everyone meet, okay, everyone has already prepared to go back home already. The market is already closed. 4 o'clock, yeah. So what you will do is that you call your colleagues, okay. If there is any of your colleagues who can entertain you to cover your shortage position, okay, none of them, okay, can entertain you because they want to go back already. 4 o'clock, cannot up until 5:30. You cannot find one. You are in shortage, you know. You have to cover your positions. If not, you also cannot go back. Okay, you overnight lah dekat bank itu. Okay, so what you will do at 5:30, before 5:30, you need to contact your mother lah, Bank Negara. Okay, mother, Bank Negara, can I withdraw my SRR, Salary Reserve Ratio, accounts, money, okay, from the Bank Negara to cover my position? The Bank Negara said, yes, you can. Okay, I give you that you put with me, that deposit with me. Okay, but I will be charging you interest. So the interest will be OPR plus 25 basis points. What is the OPR rate now? What is the OPR rate now? 3 plus 25 basis points. Yeah. 25 basis points, 0.25. So that is the maximum. Okay, that's the maximum. Okay, that's the maximum. Okay, market participants will access this facility when there are unforeseen technical factors that result in surpluses or stages, okay, late in the day and cannot be recovered, okay, covered via the normal money market transactions. Okay, now, okay, so, okay, nevertheless, the ensure active trading market participants beforehand and use the such facilities only as the option, final option, and there is a that this facilities is only for final option. There is no other option. The interest rate on the overnight deposit is set at 25 basis points below the OPR, which is the floor rate, while interest charge on the overnight lending is at 25 basis points above the OPR ceiling rate. Okay, interest rate and interest charge for overnight. Okay, now below OPR. Okay, below OPR. Okay, if let's say you are at the surplus bank. Okay, so if you are at the surplus bank, just now you are lending from the Bank Negara. Yeah, you are not lending, you are borrowing from the Bank Negara. Now, in the situation that you are in the surplus, bank is not encouraged to keep their money for surpluses. So they don't want actually to have a surplus in the banks because with that particular surpluses, they can lend it out and earn a little bit interest. Now, when bank have the surpluses, you are talking about the surpluses millions. Banks tak ada surplus RM1 or RM2 or RM100 one. Okay. So when these banks have the surpluses, what they will do is that when they cannot lend it out in the market, they will contact the Bank Negara. Is there any banks that can they give the money to the shortages bank? Just now shortages bank, borrowing from the Bank Negara. So this one is when the banks have surpluses, they want to lend it out their funds to the other banks which have the shortages, which are having shortages. So these particular banks, they will call the Bank Negara, can you get the matching, or these particular banks, they can contact the banks which are having the shortages themselves. I will be lending you my money, but I will be, the charge of the interest will be much more lower lah. 3% minus 0.25. That will be it. If you are borrowing from the Bank Negara, the interest charge would be higher, OPR plus 25 basis points. But if you are borrowing from the banks themselves, when you manage to contact the bank, that will be OPR minus 25 basis points. That is actually what is happening in the banking sector. The interest by the Bank Negara is much more higher lah, OPR plus 25. But if the interest that you get from the market, if you manage, then that will be OPR minus 25 basis points. That is the standing facilities. This is just a structure. Don't worry about this one. Statutory reserve requirement. SRR is used as the monetary instruments to adjust the liquidity positions, condition in the banking system. Banking institutions are required to maintain reserve requirement equivalent to certain proportion of their eligible liabilities based on the SRR rate prevailing there. By increasing the SRR rate, banks are required to increase their balances in their statutory reserve account maintained with the Bank Negara. Conversely, if the Bank Negara lowers the SRR rate, part of the balances in the SRE will be credited back to the bank. And in ensuring a smooth and efficient monetary policy transmission, the choice instruments to use is crucial depending on these three factors: the degree of controllability on the monetary instruments, the degree of sensitivity or responsiveness of the monetary instruments, and the effective efficiency of the financial markets. Don't worry about this one. Okay. Now, statutory reserve requirement. Okay. Statutory reserve requirement is part or is one of the components of the money market operations. Okay. Don't get yourself confused. I will show you this diagram. Don't look at this. Look at this. SRR is for money market operations. That means SRR ini is for liquidity management. SRR is money market operation. One of the components of the money market operations. When you are talking about operation, kan macam you punya factory ada operations, right? Okay, that means daily operation. When you're talking about daily means liquidity management. Meanwhile, OPR, this is monetary policy. This is monetary policy. Remember this? Okay, I go. Ni. See? As for Bank Negara, they also need to manage their liquidity. Okay? And at the same time, they have to maintain or manage this monetary policy. As for liquidity management, and because you're talking about liquidity, liquidity, that means daily operations. Now, this is money market daily operations, not your factory daily operations. Factory also got daily operations for the liquidity. This is money market daily operations. That means your liquidity. Since Bank Negara is part of the player of the money market, they also need to manage their own liquidity. Not only banks, the Bank Negara also as a central bank, they manage their liquidity with the institutions by having this SRR. SRR is for liquidity management. This is not monetary policy. SRR is for liquidity management for Bank Negara and banks. SRR is a money market operations component. OPR is monetary policy. Remember the mandate of the Bank Negara to maintain financial stability and to maintain monetary stability, right? That monetary stability, that is with regards to the monetary policy, and that is with regards to the interest rate, which is which has the name of OPR, overnight overnight policy rate. That's it. And you have to understand this one. I appreciate if you can understand this one. SRR. This is most crucial one. Talking about the SRR, SRR is between Bank Negara and their institutions. OPR, since its monetary policy is to maintain stability of the economy, is between the Bank Negara and the people. Please remember that. Again, I repeat, SRR is for liquidity management. That is liquidity management. That you are talking about the liquidity management of the Bank Negara, and the banks, the financial institutions. SRR ini is between bank negara and their institutions. Okay. SRR is one of the component of money market operation daily for the liquidity management, SRR. Even though it's rates, okay, but different function. OPR is the monetary policy. Remember, Bank Negara mandate is to maintain monetary policy. There are two mandatory mandates of the Bank Negara: maintain financial stability, monetary policy. For a monetary policy of the Bank Negara, if they want to have that maintain that mandate, monetary policy, OPR. OPR is between the Bank Negara and the youth. It's not between Bank Negara and you. It's not about liquidity anymore. Right? It's more on the managing monetary stability. You want your country's monetary stability is stable. It's between Bank Negara and the people. Okay, you have to understand this. Statutory reserve requirement. Yeah, I'm the Bank Negara. Imagine you are my banks. So what you should do is that each one of you should open SRA account with me. Because I'm the superior. All of you, consider all of you are my banks. In Malaysia, 150 of you, you need to open SRA, statutory reserve accounts with me. And there will be a rate of SRR. What's the rate now? What is the rate now? SRR rate? What is the SRR rate? 2. That has already been reduced, right? From 3. When this rate was reduced? When the rate was reduced? 2020, correct? Okay, during COVID-19. There was a purpose or objectives why the Bank Negara reduced these rates. When you're talking about 3%, 2%, 3%, 2%, these rates, you have to follow. 2%, 3% out of 2%, 3% out of tak tahu. 2%, 3%, you know 2%, 3% out of I'll go and find it. Out of, so the bigger is your bank, the more money you put with Maybank, with Bank Negara, right? If let's say Maybank, that is the most, most funds that you put in a Bank Negara, SRA. Maybank let's say you are the MBSB bank, your money you put with the Bank Negara, in your SRA account will be much more lesser than Maybank lah. Because the percentage out of, you find yourself. So, talking about SRR, look at this. Last time, before 2020, this SRR was 3%. So meaning that the amount that you put in the Bank Negara Malaysia will be quite a lot lah. 3%. And after, in the year 2020, the Bank Negara revised the SRR, reduced to 2%. What will happen? The extra 1%, the Bank Negara will return it back to you, right? For your liquidity management, right? Because at that time, moratorium 6 months. You cannot collect debt repayment from your customers. And at the same time also, people are asking for loan because they want to survive. Whether this SSR reduces and increases, how it can affect the bank's lending activities. The bank's loan interest rates of the borrowing costs and the bank's credit growth and profits. Okay, now I give you an example. One example, Now SRR has already been reduced to 2%, right? So Bank Negara has already returned the money, the extra 1% to you, right? So you bank, you have more. If I'm the bank, I return back 1% to you. You banks, you have more money. Your lending activities going up. Your interest rates, sure. Yes. Okay. Yes. Okay. Your interest rates. Okay. When the bank has more money, because the bank has already returned the money to you, then you have more capital to be lending. You have more funds, not capital, more funds to be lended out. So when more capital funds to be lended out, you can charge slightly lower interest. Okay, the lending activities, okay, would be boost a little bit, could enhance your lending activities. How about your bank's credit growth and profits? This is generally ceteris paribus. Your bank's profits and credit growth increase. Theoretically, not considering other factors. Theoretically, your profits, it could be higher a little bit. And vice versa. Okay. Okay. When you have, okay, then there will be consequences of doing that also. When the bank is giving more loans to people, you see, this is during COVID-19. Bank will be able to lend it out loans to people and charging them low interest. But that one is during COVID-19. But you still remember during COVID-19, people are having trouble in paying their loan. Okay? There is a tendency whereby the bank will not be able to collect back the repayment of their loan from certain customers. You said that the bank's profit and credit growth will grow. But would it be true? It's all depend. There is also a tendency whereby when the SRR being reduced, there is a tendency of a bank's failure. It never happened in our country. There is a tendency of a bank's failure. Tendency, but it never happened in Malaysia. There is a tendency. Because now the money is yours already being given. You said your credit growth can increase, your profit can increase. You can give loan more to the people and you charge lower interest rate. Yeah, fine, that is theoretically. But you have to consider certain factors, the consequences of doing that. During COVID-19, people were having a financial constraint, financial distress. There is a possibility of people not paying back their loan. They can get loans, but there's a tendency of them not paying their loan or late repayments. Later, your credit growth also, you said that will be increased. The later, if this thing happen or this thing prolong, your credit growth can reduce. Your profits also can be reduced. That's why I'm saying this is only in theoretically, not considering other factors. You have to look from different angles. One thing that is good, another thing is not good. Okay. Vice versa lah. SRR, if rates increase, you have to put more money with the Bank Negara. If you put more money with the Bank Negara, at least you can safeguard yourself from any bank's failure. If let's say you have a financial constraint with the bank, you can borrow from the Bank Negara. Okay, that's fine. That is fine. Even though it will restrict your credit growth because of the SRR increase, okay, in certain point that will be good also. Okay, and I need you to really think and digest this and visualize this and absorb this. You have to think. I will test you whether that or this. Okay. That or this. That or this. I can ask you with the SRR is being reduced. I can ask you what's the implications towards this one, what the implications if like this one, and I can ask you on another side if the SRR being increases, what will happen on these three factors? What will happen? Okay, what are the positive side or negative side? Okay. But basically, I'll be testing you on these three things lah. Okay. SRR. Okay, Federal Reserve requirements. Okay, yeah. This is the thing, okay, that you need to know, okay, and gain your knowledge. Decision to reduce SRR, was undertaken to maintain sufficient liquidity for liquidity management in the domestic financial system so that banks can use these additional funds to increase their lending. So to increase their lending activities for their credit growth. The downward adjustment of SRR would raise the money multiplier, causing a multiple increase in the money supply. More money supply in the market because Bank Negara has already returned back the money to you. So money supply in the market will be increased. So lending activities of the banks will be increased. Subsequently, theoretically, the bank's credit growth will increase. The bank's profit will increase theoretically. Again. This is in addition to original monetary expansion arising from release of funds to banks, monetary expansion. This will continue to support the efficient functioning of domestic financial markets and facilitate effective liquidity management by the banking institutions. Because the banks really needs money because they are having a problem of illiquid money during COVID-19. So they need more funds, So the Bank Negara has already returned. So what will happen is SRR to be increased. So there is a tendency SRR to be increased back, but don't know when. Don't know when. But for the time being, it still remain at 2%. Okay. There's a of course, there is a news, coming news the SRR actually to be increased back to the original. Islamic money operations, this is another component of the money market operations. Anything got to do with Islamic money market operations, you can always obtain from the Islamic interbank money market bank.banknegaramalaysia.government.my. This is for the Islamic. I don't want to talk about this one. Now, monetary policy. Before we go and enter into this monetary policy, let us have this one. At first, I need you to listen to this about inflation. Something which is interesting. 5 minutes? Okay lah, rest for 5 minutes. 80s, 90s, my salary 1990s, 1750, no? In a bank. Okay, this is about inflation and this one. Okay, these are the two videos that are good for you to see, okay, about the inflation together with the OPR connection with the inflation to cushion the inflation. So talking about this one, okay, let's see OPR, BNM. Okay, the first video talking about the OPR when the OPR was here, 2.25. Yeah. Before that, this, okay, during during COVID-19 2022. Okay, before that, 2019 it was 3% OPR. And then years before that, ranging from 3 to 3.25. Okay, and then the pandemic hit us in the year 2020, and then the OPR reduced to 2.75 because every time reduce, they cannot reduce tremendously. They reduce only 25 basis points, 35 basis points, 35 basis points, 25 basis points. So reduce to the lowest 1.75 during 2021 and 2020, and reduce and increase back to 25 basis point, 35 basis point, 25 basis point, and 25 basis point. In the year 2020 has already increased, gradually, and again, it hit the 3% in the May 2023. That was a few months back, and then this rate of 3% new level of APR is still at the present and the current rate. Okay, talking about the OPR, this OPR is actually set by the MPC committee, monetary policy committee, monetary policy. Bank Negara Malaysia adjusts the overnight policy rate to maintain a stable economy, maintain monetary policy. OPR is monetary policy to maintain monetary stability. That is the mandate of the Bank Negara. Okay, monetary policy is the action that the Bank Negara Malaysia takes to influence the interest rates in the economy. As the central bank, Bank Negara Malaysia's role is to promote monetary and financial stability. Okay, in this particular case is actually for monetary stability. This is aimed at providing the conditions suitable for sustainable growth of the Malaysian economy. Yeah, to achieve monetary stability, our MPC sets the monetary policy by changing this OPR to keep inflation low and stable while supporting economic growth. It's always we want to maintain the inflation low. What does it mean by inflation? I'm not the economics lecturer, but it's got to do with this policy by the regulatory bodies. It's not good for you to have an inflation. Inflation means everything is expensive. Products are expensive. Things are expensive. Services are also expensive. Everything is expensive. Then you know that is inflation. Inflation is all about every prices of the commodities and services are expensive. So this is about inflation. During inflation, the cost of living is high and it hurts us, especially the low income people. We can see the pitch. The loans repayment will be increased in the amount. If let's say you got one house, some more the house is a daily rest interest. If you are stuck with 1 million loan, how much the loan will be increased if the OPR increase? So what to do? My loan, housing loan also increase, for hundreds, almost thousands of ringgit, and my salary increase only 1% of that. Where to get the money? Car loan is okay because it's fixed. Personal loan, credit cards, I don't know. Okay, fortunately I don't have that lah. Tak ada car loan, tak ada credit cards, nothing. Personal loan pun tak ada. Okay, so okay. Safeguard. This OPR, back in the year 2022, because of the inflation, 2022, people has already moved out from pandemic in the term of recovery. Then people start spending already. Buy iPhone lah, travel overseas lah, buy new houses lah. Wah, spend like hell at that time. Okay, as if never spent before. 2 years being locked down, they save a lot. Then after that, they spend a lot. So inflation came. You know how many times the OPR increased back in the year 2022? 4 times. 4 times. Yeah. MPC, they meet at least 6 times a year, at least. And every time when they meet, okay, during that financial year, they need to decide whether they want to maintain OPR or increase or decrease. Definitely in this particular situation, they are not going to decrease, but instead they are going to increase, because if you are looking at the US condition, they are increasing their interest rates like hell. They never care about their people one. Okay. There are people, they need to adjust themselves. They don't care whether their people die or not. Okay. For Malaysia, we still can be softened with our people. And that's good lah. Malaysia semua, okay lah, lembut sikit, soft a little bit. Okay. So you can adjust accordingly. So you have the ample time to adjust to your loan repayment accordingly. So that's it. So let's move on. Overnight policy rate is set by MPC of the Bank Negara, and these decisions are made autonomously without any internet influence. The government did not influence the MPC, and nobody influenced these MPC people. Of course, the government can have their saying. Okay, please take a look at the MPs. Okay, our OPR. Could you please do something, Bank Negara? Could you please do something because of the inflation? Inflation is not good for the economy. The government can only say that to the Bank Negara, because the government is handling fiscal policy and the government is handling the economy. Yeah, anything got to do with the inflation is not good. So in order to combat or to cushion the inflation, the government has already said this 1 or 2 words with the Bank Negara Malaysia. Please take a look at this one. What is the mitigation tool that you can implement in order to lower down the inflation a little bit? Okay, so that the people won't get hurt and the economy won't get hurt. So not influenced by others. And this MPC, they meet at least 6 times a year. They are missing the expertise of the MPC members. You can see the MPC members, they are the governor of the Bank Negara Malaysia, the members, and then other member who are appointed by the Ministry of Finance and all this one, the deputy governor, and not less than 3, but not more than 7 of other members. These are mix of expertise as they're becoming the MPC members. They are also meeting at least 6 times a year to decide on the OPR, and then after they have already met, they will publish their statement, just like this one. Here, you can view their statement, view their statement. So every time they meet, they have to have their monetary policy statement, and then you can look at their monetary policy statement. What is their decision, the latest decision? And they are about to increase the OPR one more time. Habislah. Okay. Now, don't worry about this one. This is just a flow. How they decide on the OPR. They meet and set the OPR based on certain conditions. Don't worry about this one. When setting the OPR, the MPC takes into account the latest economic and financial development. For example, they will outlook of the domestic inflation and growth, risk of destabilizing financial imbalances. So let's take a look. MPC's aim is to maintain low and stable inflation, because the government has already said the words to the MPC, to the Bank Negara. Please take a look at this inflation, because we want to maintain low and stable inflation, not high inflation. This is to promote sustainable growth and to stabilize the economy. In carrying out this mandate, MPC, which they have the members, they have to have determination, to have their direction of the monetary policy based on its assessment of the balance of the risk to the outlook for both domestic inflation and the growth. The MPC of the Bank Negara decides on whether the OPR is at an appropriate level to maintain price stability while supporting economic activity. Thus, when deciding the OPR, they look at the risk to both inflation and growth in Malaysia. And the MPC also monitors risk of destabilizing financial imbalances given their implications for the prospects of the economy. Let's see, this one. Take a look at this MPC. Let me explain this one. the Bank Negara is one more time having their decision to increase the OPR, but being restricted by the government. Not yet. Not yet. Because you see, the Bank Negara increased the 3% of the OPR. Do you think the people can keep on spending or reduce their spending? Theoretically reduce lah. But you see the trend? Not really. iPhone 15 coming out. Wow, the long queue like nobody hell. So then people are buying house some more, buying luxurious things, going to Korea lah, go to Japan lah, cuti-cuti here, there, buying branded clothes lah, buying there lah, going to Mitsui lah, buy things lah, buy cheaper shoes lah. You think that that shoes what shoes Nike ke apa itu RM600 they consider cheap. How is that? You put you put RM600 on your feet. I would think that will consider as so much expensive, you know. That one. Okay, you keep on spending. It doesn't hurt that much. Yeah, to some people you feel that pinch, but this one, the 3%, it feels nothing. It feels nothing. So that's why the prices keep on increasing. Even in the first place, when the Bank Negara decided to increase the OPR, it can reduce your spending. In a way, yes. But generally, you look at the general spending of the people, they are not really slowing down. Okay, so there's a possibility of the OPR being increased once more. Okay, we want to maintain low inflation, but it seems like the inflation is not really lowering. Okay, but still maintaining, or there is a chance to increase in the near future. Okay, don't worry, this is the making process of this, decisions making of the OPR. Okay, MPC. Okay, when you talk about the OPR decision by MPC, remember in the beginning of the class, I asked the MPC, I told the MPC, my MPC members, they will definitely look and decide this policy after they have already had the report from the FMC. Because they need to forecast what's the direction. They want to know what's the economics condition. They need to ask the FMC, what are your objectives for the time being? So everything needs to refer to the FMC in order for this MPC to decide on the OPR. This is the snapshot of the statement of the MPC in the year 2023 May, when they increased the OPR from 2.75 to 3%. Okay, how this, okay, take a look at this one. Okay, when you are talking about the OPR, OPR ini is the interest rates, reducing or increasing in the OPR, how it can control the inflation. How it can control the inflation? With the hope that when the OPR increase, your loan will be much more higher. You need to pay more on your loan, especially your housing loan. So meaning that you need to allocate extra money from your income, for example, for this loan repayment. Example, if my housing loan last time for certain amount, then after the OPR increase gradually back in the year 2020 for 4 times, now hit one more time, 5 times already. So I need to pay extra 1,000 for my housing loan. So when can I get that extra 1,000? So of course from my salary, I need to allocate extra 1,000 from my salary just for the repayment of my housing loan. So basically my spending has already been reduced for 1,000 ringgit. When my spending has been reduced, when people's spending has been reduced, what will happen? The demand for the prices of the products or services will be reduced. When the demand of the product and services reduce, the price subsequently will reduce. And the demand will be lowered down to the equilibrium of the supply. Now I'm acting like the economy teacher. Those who are learning, have already learned economy, then you know. Okay, demand up and then slowing down. Okay, meet the supply equilibrium. So at least, okay, it will be lowered down. Okay, and then, okay, gradually it will actually reduce a little bit of that inflation. Okay, so what will happen? Okay, how it can control the inflation? People are spending less, and then you explain lah by yourself. Okay, how it affect your savings? Okay, how it affect your savings and how it affect your loans? And is it good if we keep this OPR for high for a long term? And is it good for this OPR to be low for a long period? Let us go back to this. Okay, changes in the monetary policy. Yeah. So when you are talking about the changes in the monetary policy, it will always have that 25 basis points lower and upper 25 basis points around these decisions by OIR lah. Okay, don't worry about the whole thing. Okay, just make sure that you know the changes of the monetary policy will be decided by the MPC based on the direction of the Bank Negara that is also influencing the AOIR. Don't worry. Okay, that is actually to be increased or to be reduced by 25 basis points. Okay, one time. Yeah. Now, changes of the OPR will affect your lending and saving rates. The higher the OPR, the more expensive it is to borrow and vice versa. And however, as the OPR increase, savings rate will go up too, benefiting the depositors. So let me explain. Let me read, then I will explain. The OPR is the Bank Negara's policy interest rates, monetary policy, to change the interest rates that influence, among others, banks' lending and financing rates as well as deposit rates. These rates tell you how much the cost of loan is or how much the returns are for deposits. They are applicable for both conventional and Islamic finance products. And to keep things simple, we refer OPR as the interest rates. Changes in the OPR affect the economic activity and overall price level changes, and typically by influencing interest rates on savings and borrowings. When the OPR increases, banks pay higher interest rates on the funds that savers deposit in the banks. Savers will benefit from the higher returns on savings, and similarly, banks will also charge higher interest to borrowers to reflect the higher cost of funds. Okay, now that the economy is improving, the OPR needs to be adjusted. So as per today's condition, the economy is no longer in the crisis like what we have experienced during COVID-19. And in our economy has already steadily improving. So we need to adjust the OPR gradually during that time lah. It is important to have the right policy at the right time. If we keep the OPR too low for too long, when economy is steadily recovering, for example, it could cause too much spending and borrowing, which push up again the prices. Then subsequently, it may harm the economy in the future. So we want to avoid the case where prices keep on rising at the fast pace for many times. This is worse when higher prices lead to higher wages, which then lead to the higher prices again. If this does not come with improvements in the productivity, increases in wages will be offset by higher prices and purchasing power could be eroded further. And this bad cycle can go on, causing extreme inflation, which harms the economy. And not only that, it may also lead to an increased risk of speculative behavior, unsustainable borrowing activities, and inflationary pressures from excessive demand. Let me finish this. When we increase the OPR, higher interest rates on savings and loans will influence people to save more and spend less. For example, when the demand for goods and services in the economy is more than supply available, prices will keep on rising. People will pay more to buy what they want. The higher OPR will help slowing down the demand. This brings demand more in line with supply and prices will increase more slowly. And the question would be, what happens if there's a reversal, for example, during COVID-19 when the OPR was lowered to the historical low in the country? Now, it is more important to have growth that can be maintained without causing other problems. We have seen how growth that is too high or driven by cheap credit can damage the economy badly, such as in countries which face extremely high inflation. So when this happens, it is the people, including the future generation, who will pay the cost and be left poorer. Having sustainable growth helps to temper such a boom and bust cycle. So as for individual, monetary policy set by the regulators will have an impact towards our life. As such, we need to be a strategic financial planner for our own benefits. Be wise, be great, earn better, less burden. Okay, talking about the OPR. I just talk about whatever I need to talk in the slide. In order for you to imagine this, now the OPR increase, right? What will happen to your savings? Increase? Both are correct. Increase can, decrease also can. Okay? You look at this way, when the OPR increase, your loan commitment increase. Your savings will be less. Because last time you have 1,000 savings, now because of your loan commitment, for example, your housing loan, you need to pay more extra hundreds of dollars. So you will be using your previous savings that you used to save, your savings money that you used to save in order for the loan repayment. So instead of saving 1,000 like you used to save, now your savings has already been reduced to maybe 500 or the worst could be 200 because you need to pay extra to your house, housing loan. If you got one house, if you got 2 houses, then die. 3 houses, some more cannot. Dalam kubur already. That will be, you said your savings will be decreasing. But in a way, if I have extra money, I'm a business person, I don't care whether OPR increase or decrease. I'm a rich person. I have a business and my business is doing well nowadays. I don't care up or down. I don't care. I still can maintain my lifestyle. I still have the extra funds and everything. So when the OPR increase, what happened to the deposits interest rates? Increase. Your fixed deposits and other investment instruments, the interest rates increase. So I have more funds. I put more money lah. Oh, sekarang rates semua increase. I put more money lah. Since I got more money, extra money Because house, my husband pay. Car, my husband pay. I don't have any commitment, so I have extra money. Somehow my husband give me allowance quite a lot. So don't know what to do with the money. The bank is giving me quite a high interest rate because the OPR increase so I put more money, save more money. So in a way, your savings could be reduced or your savings could be reduced. That could be increased. The reducing because you don't have extra income. So your loan commitment is higher. You don't have extra income. Your increment also not enough to cover your loan commitment. So your savings that you used to save for a certain amount has already been reduced. But in one particular thing, when you have extra money, then you see that the interest rates of the investment products by the bank, like money market, investment products, or the fixed deposit, the interest has already been increased because of OPR. You be like, better I put my money here instead of putting my money under my pillow. Like that. Okay, when the OPR increase, what happens to your loan? Increase. But that only applicable to the loan which has floating rate, not fixed rate. Fixed rate like car loan, okay, still okay. But the the housing loan and the credit card, personal loan, ASB loan, these are the loans that you need to really look into because they are increasing in the price. Those who are committing in new loan, then you will also be hurting yourself. Don't take loan now. I'm not saying that you cannot take loan but be careful Okay, keeping low OPR is not good. Okay, of course during COVID-19 we have to lower down the OPR. Because people having the difficulty in paying back their loan. Some more there was a moratorium. Yeah, so you lower down the OPR so that the loan repayment can be reduced. So okay, during OPR get reduced, but towards the time keeping the OPR low is not good. Okay, because after that, when you see the OPR is lowered down, you have the extra money, you spend now. Okay, after you spend, the price keep on rising and the inflation keeps on coming. High inflation keeps on coming. When you spend, after COVID, people keep on spending while the OPR still at the lowest rate. So you spend, the prices goes up or the prices went up, then the inflation also went up. When the inflation went up, prices went up, it pinch or hurt the B40, or the low income people. Not good. And it's not also hurting the low income people. You are also can feel the pinch also lah. Can feel the hurt also. Because everything is expensive. Even though you are coming from a wealth or rich family, you still can feel the pinch. Bayar sayur pun expensive now. 20 ringgit. This one only. Last time 100 ringgit can pull a trolley in the Tesco. Now 100 ringgit 4 things only. 4 things only. Beras dah 40 ringgit or 50 ringgit. And then sama minyak sudah 30 lebih. Almost 100 already, 2 things only. Okay? That's the thing. So, and then keeping it, OPR higher for a longer term, it will not be that good. Because people will spend less. Spending less when the OPR increase and keep on increasing for a longer time is also not good because people are spending less. Spending less is not good for the economy. We need spending to generate the economy. Remember? In the economy, there is equation spending, export, import, and everything, government spending, your spending, right? Spending, must be there to generate the economy. We need people to spend also. High OPR cannot, low OPR also cannot. So you need to stabilize. You need to look at different angles. Now, talking about the OPR and SRR before we end. For your loan, that will be SBR, last interest. Okay, take a look at this example. Okay, I think one of the example of the product disclosure sheet. This product disclosure sheet, I will have it in your final, but I will not tell you what is SBR. You need to know what is the SBR as per the effective date stated in the exam question. So I won't say what is the SBR. Yeah, this one. Yeah. For banks loan, they will have this product disclosure. Please look at this. SBR is the OPR. SBR is the OPR. This one. Standard base rate is the OPR. Now it stands at 3, right? Stands at 3. Now 3%. Right? 3%. Right? Interest by the bank. Now, SRR is how much? 2, right? So the bank will be able to reduce their interest rates on loan, right? This interest on the bank can play. This one is up to the bank. Some bank, they can give 2%. Some bank they can give 3%. 3%. In some bank they can give 1.8%. So it's you yourself need to manage your financial position. You are the financial planner for your financial positions. Look around, compare. Even though, okay, don't get yourself trapped with the financing product by the bank. They said, oh, okay, our financing product 4.9% fixed rate. Yes, they said fixed rate. This is not fixed. For the time being, it's fixed because OPR and the rates. If the OPR increase, that is fixed to that. Because OPR, the bank has no control. When the bank said, okay, I want to take personal loan lah dengan you bank. Okay, bank say, okay, my loan is much more cheaper than the others. I can give you 4.9% fixed. Don't get yourself confused with the fixed. It's not fixed at that rate, you know. It is fixed, 4.9%, but at today's OPR. If the OPR increase, that means your loan also increase in the percentage. Okay. Okay, please make sure about that. Okay. Sometimes they play with that. Okay. So you have to be smart enough. I know people will blame the government. Why the government increase the OPR? Why the government do like that? Why the OPR increase so many times? Ikut suka nila. It's not the government decide. It's not about you. You have to manage yourself. How? Okay, why you commit yourself into the loan? Why you take so much housing loan, 1 million loan? Okay, then you know there is a possibility of the interest rate to go up. So you have to question yourself whether you can, okay, manage to repay your loan if the OPR increase. You yourself have to manage yourself. Okay, don't blame the government. The government increase or decrease the OPR is for the benefits of all the people, the economy. They won't look at you one. Okay, you feel the government is cruel. The government increases so many times. Okay, you're hurting the government. Okay, like that. Okay, it's you actually. Okay, you cannot blame the government. The government, the objective is more on the economy. Okay, it's more towards the people, not you. You have to manage yourself. Okay, it's not about the regulations. The regulations set for economy. The regulations set for the benefits of the people. It's not the benefits of you. You pandai-pandai lah. You pandai-pandai ambil loan, you pandai-pandai manage lah. Is it like that? Okay? Don't blame the government, don't blame the regulators. They know what they are doing. Okay? So, with that, this monetary policy, OPR and SRR, especially the OPR, not only applicable for the money market. Please take a look at all these things that I've already showed to you, visualized to you. And then I will also ask you, how this OPR, increase or decrease OPR affects the foreign currency, affects your investment in equity, affect the bond prices. This is how the regulations or regulators, or the policy made by the government or the Bank Negara got to do, or affected other markets as well. Definitely, you have this in the forex, you have this in the bonds market, you have this in the equity market later on. Okay, for the time being, that's the thing that I can say to you. Okay. Of course, it will have an effect to the currency exchanges. Okay, the value of your currency, your investment in equity, and the price of the bonds, and the demand of the bond. What happened? Okay, so you have already learned about the bond. And now, what is the implications of the OPR towards the bonds prices, your investments towards the bond? If let's say the bond is fixed rates bond, floating rate bonds, what will happen? As in like that, Okay, any question? If you cannot understand or you cannot catch my pace, please make sure that you come to me for consultation. Okay, if there is nothing, see you when I see you. I've already postponed to a later date of your replacement class to be announced maybe later on lah, don't worry. So your replacement class for this week, yeah, they are all cancelled. Yeah, hoye hoye. Bye bye. Ma'asalamah. Annyeong. Apa lagi? You. What? No, for topic 1, yes.
Tutorial 2 lah. For topic 2. Okay. Half lah. Half on tutorial.
I want to ask, how does OPR actually get charged?
What?
How does OPR get charged?
Get charged?
Is it charged on a daily basis or monthly basis or based on
Okay. OPR, okay, that is the interest rate, right, by the Bank Negara. And then, okay, kalau you punya, okay, let's say for a housing, right, okay, you have the bank's interest rate and this OPR. Okay, OPR akan naik or turun. Okay, usually kan, okay, this interest rate by the bank usually they won't change for you lah. Okay, this one, okay. Then, okay, you have that interest rate, bank housing loan is charging on daily rest on your outstanding.
Housing is charged on
Daily rest.
But the OPR, so in a way,
OPR is just be like that.
So the OPR rate is not actually charged by the bank. Like, sorry, Bank Negara does not charge OPR towards the banks themselves.
OPR is the interest rate for the banks to be in charge for their loans.
So in a way, Bank Negara does not collect any money from the banks. It's just the minimum rate they expect the other banks to abide by.
Yes.
Then that means when they say charge OPR, it means it's just the banks institution
Charging the customers.
Affecting each other. Okay. Then the other one is it only gets affected.
You see, kata my housing loan I pay monthly tau. So every day got outstanding, you know how much they are charging every day.
So the minute changes, all of them stack up, then you have to pay your monthly outstanding.
Oh yeah, terrible, you know. So you accumulate lah. Yeah, daily up until the end of the month. That interest plus my loan commitment. That's why if let's say your salary 31st of something and then let's say you macam salary 31st kan, okay, let's say you delay 2 days that 2 days interest some more lah. So for loan reduce it as much as you can. The outstanding reduce but you don't expect you to pay for your installment month daily, right? Okay, back to your question again, the second question.
That's it. Wait, is it the OPR is charged differently for different industries?
No, the OPR
is always by daily.
Yes, not industry lah, but banks.
By banks on a daily basis,
no matter what. So not all banks some they have this macam Aeon Credit kan. Aeon Credit SR or the OPR itu sama. Tapi Aeon Credit the interest by the Aeon itu tinggi.
So that they can.
This loans mesti OPR or SBR itu plus
whatever the
what the interest by the institution. So itu yang you kena tengok. OPR will be the same. The interest by the institution. Yes, can.
Thank you. Thank you.
Sama.
Yeah.